Welcome back, everyone. I hope you are well. I know it has been a while, but 2025 is the year where I dedicate myself to providing valuable content, quality content on all forms of social media, and try and help as many people as possible. But as you can see from the screen, today we're going to be going over the blueprint for trading success. And I believe this is a good video to start on because a lot of people overlook the process that I'm going to lay out for you. And it's probably one of the reasons why most traders fail. So just to go over a bit of what this video will entail, we will start off with going over the process that you should be looking at if you're new to the markets, what kind of things you should be focusing on in order to, get yourself rolling, get the ball rolling on your journey. And then once you have a good understanding of some theory, you can then start to look at a process that will allow you to internalize the theory, find a certain price behaviors that you can trade and take yourself from, someone who's confused and lost in the markets to someone who can, navigate the markets well and more or less be profitable and consistent in the markets. So without further ado, let's start off with theory. So if you're watching this video, I'm going to assume you're in one of two situations. Number one, you're brand new to the market and you don't really know what you're doing. Number two is that you've been in the markets for a while and it's not really going your way. And for both those scenarios or situations, I would always suggest going back to your theory, right? And as you can see here, theory refers to how you interpret the information that is being presented to you on the chart. There are many different ways to trade. However, you need to find the trading style that suits you, right? So if you're brand new, I suggest that you look on YouTube for a couple different traders and go down different avenues and try and find someone that you have an affinity to or towards, right? Someone that you get along with, or you have an affinity towards the way they carry themselves, the way that they read price, right? Because some people are going to trade with algos, which I don't personally do. Some people are going to trade fundamentals. Some people are going to trade pure price action. And there's many different ways to skin a cat. So you need to find the way that suits you. Me personally, and for anyone that follows me and is interested in the way that I trade, I would suggest that you find a mentor that can teach you the fundamentals of price action, right? And I mean, someone that breaks down price action to the point where they're talking about the order book, talking about order flow, talking about supply and demand, talking about liquidity dynamics, volume, and all these kind of things, because that is the core drivers of price. If you start to stray away from that, it can get pretty, it can get pretty bad out there with the content that's out there. However, the best thing you can do is try and find someone that's been in the space. I done that and it helped me. It saves you a lot of the bullshit, a lot of the fluff that's in the industry. The next best thing is to find someone that has been mentored by someone who has been in the industry. But you want to try and get as close to the source as possible, right? You want to avoid the YouTube method of just going through free videos and trying to pull different systems from different people, because you're going to end up in a state of confusion. It's difficult to try and build a system from multiple different systems, trying to merge them together. It just won't work. You don't put yourself through a structured development plan in order for you to internalize certain price behaviors and read the market proficiently. You're just going to be confused. It's not worth it. So as much as it's free, it will be very costly in terms of time, right? So again, your main goal is to learn how to read price. That is what you want to do. Stay away from the indicators at the start. Learn how to read price. And then you do not want to create something new, but rather you want to copy from someone else who has already been through this journey. And that is just for now. Eventually you can go down the process, which we'll talk about, where you kind of adapt what you've learned in theory to your own understanding or your own experiences. However, for now, at the start, you want to be focusing on the theory that is getting handed down to you, right? You don't want to try and create something new or create your own concepts. A lot of people do that at the start of their journey, thinking that they're, doing something cool. That's just going to hinder your journey. You want to go as close to the source as you can get and learn as much as you can learn. So now we come on to experience. Before you start making a trading plan, you must first have a development plan. This is a structured process that you will take yourself through in order to internalize price behaviors. Trading success does not come from copying someone else's plan, but from creating your own plan, which has to be developed and validated by no one other than yourself over large sets of data, right? And this is one of the most important things that you can hear in your trading journey. It can be it sounds very simple and it's easily overlooked. However, this is what will take you from zero to hero, so to speak. But it's this process of taking whatever theory you learn, right, putting it into live market conditions or simulated conditions and putting it through the test and through the grind and internalizing the price behaviors to a point where you become one with the price behavior, right? You collect data on it, which we'll go through and talk about, and it becomes your own. You're not copying it from someone else, right? You need to familiarize yourself with each component of price action. As you develop your awareness, you will begin to pick up on the various volatility drivers and internalize them. Cool. So this is where we've gone through theory, right? You have your theory and your understanding of the markets, right, that you've been given down. However, you can't just take that and run with it, right? That's like having a 2D understanding of the market. Once you step in and experience certain dynamics of the market, you give yourself a 4D perspective, right? So how do we do that? How do we familiarize ourselves with each component of price action and develop our awareness to the volatility drivers and internalize them, right? Well, this here is for price action. You might be, an algo trader, like I said, you might be fundamentals, whatever, but you need to find out your specific area, break it down into its components and familiarize yourself with all of them. This one, like I said, is price action based because that's how I trade. So we're going to break that down. Price action can be broken down into multiple little sub-components. We have time of day, context, areas of interest, volatility, news. You can break it down into more, but for this video, let's keep it as that. Now, what this means is that you need to familiarize yourself with each one of these components and interact with the market enough that you understand each of these components. So, for example, time of day. You have Asia session, London open, London close, New York open, New York close. You need to engage with each of these market times and internalize what happens and the volatility at each of those times. You can say, okay, cool, during Asian session, we don't get much volatility. However, when London opens, we get a lot more volatility and we can see, one of the main moves of the day. Again, with New York, we can see one of the main moves of the day, and you internalize that, and then you can say, okay, cool, well, you know what to expect over the sessions. You might not know how to predict the direction. However, you can over large sets of data, you can say, okay, cool, well, the London session moves around 20 pips on average. New York session moves around and you internalize that and you understand that area of the market. Then you've got context, right? And what I mean by that is learning how price moves if we are going in the direction of a trend, if we're trending, learn how price moves if we are counter trend, learn, like we've got here, when price is injecting liquidity and the price action that is delivered during that, and then distribution and how price is delivered during that. You familiarize yourself with that and you'll realize that price moves very differently. The tempo and the volatility during these different phases is very different. Areas of interest, price relationships. So when you have a level that you are looking to trade from, as price moves into that, you need to familiarize yourself with what are high probability price behaviors that form as price is moving into that level. Is it moving in inefficiently? Is it moving in efficiently? Which one of those two makes it higher probability to take the trade, right? Then you look at your entry. Where's your best area of entry in terms of, your little market structure? Where's the best place for entry? Where's your best place for exit in relation to what's on the left of the chart? Risk, right? Then you have volatility, comes down to currency pairs. Time of day, again, we have average daily range. We have, once the average daily range is met, you can start to see a dying out of price. If we've already done the average daily range and you've said that the average daily pip range on Euro USD is 80 pips. If we've done 80 pips on the day, you want to be cautious trading lower or trying to extend that range, right? Pre-post news. Pre-news, we can get quite thin conditions. Post-news, you can, kind of catch some nice trades. News, red folder, volatility history, macro sentiment. What is the overall sentiment of the market? volatility history. When the red folder comes out, what is that specific news release likely to do? There's some, news releases where when you look at them, they normally drive price in a continuation, whatever direction price is going in, it continues in that direction. Certain news releases give us a flip, but you just have to familiarize yourself with each of these things. How much volatility will CPI normally put into the markets? How much volatility will the jobs release put into the markets? And these are things you need to familiarize yourself with. As you start to build a connection with price action as a whole, you will begin to notice certain price behaviors that repeat themselves. You need to interact with these as much as possible and gain an in-depth understanding of these price behaviors. The more you interact with them, the more risk data will present itself, and then you can begin building risk parameters. So before we dive into that, the point I was trying to make here at the start is that as you start to engage with price, you will build a connection with price. And the best example I have, I know it's a weird example, but if I take you over here and we have this image of this dog, on first glance at this dog, if you've seen a similar dog before, or just from the looks of it, you can make certain assumptions about this dog, right? You might say this is a happy dog and this is an energetic dog based on this image alone. Now, if this was your neighbor's dog and they said, come over for tomorrow, we need you to dog sit, and then you end up spending more and more time with the dog, you might start to say, okay, wait, maybe this isn't a happy dog, or maybe it is a happy dog. Or you'll get the facts behind that, right? It won't just be theory. This will be actual experience with the dog. And if you start spending weeks, months with the dog, you'll start to learn the time it needs to eat. It might wake you up in the morning to go out and go to the toilet. But you build a connection with the dog to the point where its small behaviors indicate a lot to you, right? So instead of it just being theory, it becomes factual, if that makes sense. Right? You've internalized the dog's behaviors to the point where you can read it just of its behaviors. And that's exactly what you need to do with price action, right? You need to familiarize yourself with the volatility drivers, the certain price behaviors, and know it like the back of your hand. For example, we come over here. We have the Asian session sweep, what I like to call it, right? So one of the, and there's so many more. A lot of people like this one. I've seen this a lot in the community recently. But there's many other ones, believe me. Many, and there's an infinite amount, right? But one example is, let's say you have your Asian range, right? Between 12 GMT and 5 GMT. And you have a high and a low, right? London Open, you say, okay, or take a step back. Between 12 a.m. and 5 a.m., you can say, okay, there's not much volatility in the markets. Liquidity tends to be thin, price tends to be very thin. Then all of a sudden at London Open, there tends to be an influx of volume and volatility. And that is internal, like you internalize that. You come to a point where you say, okay, yeah, majority of the days when London opens, we will get a breakout to either side of Asia range with increased volatility and volume. That's one internalization, right? Then you will notice on some occasions, right, over time, as you do the grind, that sometimes we push out of the Asian range and then we flip back into the range and we come back and fill the opposing side of the range. Now you've got a small little price behavior that you've got going on, the Asia sweep, where we come out, we grab liquidity on the outside or on the periphery of the range, right? We diverge from the previous high, and then we flip over and start targeting the other end of the range. And that's the price behavior that you may see happen over and over again. And then what you will do is you'll start to see, okay, cool. As you collect the data and as you sample this over thousands I would say thousands. After you've done thousands of trades like this, you'll start to say, the best ones tend to move out of this range in a certain way. Certain price behaviors will form. And then we will, form certain price behaviors on this leg down. Right? Market shift. You have your little gap there, or intent, whatever you want to call it. And the time of day that this happens as well. As you put price through the grind, you'll say, cool, this breakout normally happens at 7 o'clock GMT, maybe 6 o'clock GMT, 8 o'clock. You need to collect the data, right? So let's say you collect 100 of them and you say, 25 of these breakouts happened at 6 o'clock. 25 of these happened at 7 o'clock, and then 50 of these happened at 8 o'clock, right? And now you're building data behind it, right? You can now say, the majority of these happened at 8 o'clock. And then you say, how many of these left in tension in the market in the form of a gap? And you collect your data. How many of these formed a structural shift before rolling over? How many of these actually reached the opposite end of Asia? You see what I'm saying? You start to collect the data on that. And then as you've done that over and over and over again, you will internalize this price behavior. This will be like the dog where you can say, it's 7 a.m., it's done this, it needs to do this, right? And once you've done that over and over again, you'll soon be able to build your risk parameters. You'll be able to say, okay, cool. Once we get this shift, my stop loss, right? I'm normally wrong over all these sample sizes. I'm normally wrong above this high, right? That's when price will start to continue. Or you can say, once we run into some inefficiency that was left behind in Asia, right? That has not yet been filled. That is normally an area that we see price tap into and flip. I want to close some parts of the position there. And that's your risk parameters. You start to build risk around that. And maybe even the amount you allocate to each trade. You might say, over my sample size, this is a good trade, right? But sometimes it can be a bit, it might only provide 1.5 R over the long data set. However, this one, has an 80% win rate and does a bit more in R's. Let me put more risk. Let me allocate more risk to that. But it's all down to you. You need to understand that this is a process that needs to be validated by no one other than yourself. You don't need to go to, the person that's consistently winning on Instagram and ask them, am I doing this right? Or da-da-da-da-da. And I know it's a bad habit. It doesn't mean you can't look at what other people are doing and try to implement it, but you always need to take yourself through this process and validate it for yourself. That is essential. All right. Let's get back over here. So as you go through this process, you want to become outcome focused. As you go through this process, you do not want to be outcome focused. What you're doing is building a connection with price. There is no good or bad, just experiences that you are internalizing and integrating into your subconscious, right? What I mean by that is when you're going through the process of, let's say, that Asia sweep trade, you're not trying to be profitable just yet. The whole goal of this is to internalize that price behavior, because in reality, you can have a price behavior that over 100 trades, right, is net, performs at a net loss. However, if you can refine it down to the best trade setups, they might perform, they might only win 40% of the whole sample size. But if you can lock in and only trade those 40%, right, you will still be able to get a high win rate on that. I hope that makes sense, right? So if you have a sample size of 100 and only 40 of those are profitable, but you can identify those profitable ones and only trade those, you will be profitable, right? So your goal is not yet to focus on profitability. You want to get the sample size and internalize price behaviors, because even if it's a negative experience, you will internalize that and familiarize yourself with the negative experiences. Does that make sense? So the Asia breakouts that fail and continue, it's a real breakout, you will familiarize yourself with the price action that occurs during then, and you know to avoid it. Whereas when it works, you'll say, this is usually what happens, and you internalize that and you lean into that in the live environment. And so you don't want to be outcome focused just yet. Then one of the most important statements is that a structured experience has value, random experience does not. Where a lot of people go wrong in trading is they engage in random experiences. The goal here is not to just open a chart, guess where price is going to go, interact with it, let it shoot. If it wins and you don't journal it or look or do the data behind it, it's useless. You have no window of opportunity to grow. You've done nothing to help your development, right? And that's what a lot of traders, and I did it for the longest time. And that's what a lot of people do. They engage in random experiences. You need to engage in price action, like we've said, right? Understand the volatility drivers, the things that drive price and make it move. Understand those. Create a structured plan to trade those. Put it through the process, put it through the process and internalize it, right? Because then you have certain parameters that will allow you to say, this is what I can adjust to improve this, or this is what I can adjust to improve this. If you don't put parameters around it, there's nothing to adjust. And here, I have it written down here. One of my favorite quotes for this is, I think it's, if it's not being measured, it cannot be improved. Yeah, if it's not being tracked or measured, it cannot be improved. And that's the same with your trading. If it's not being tracked or measured, you cannot improve it. And that's why you're probably not seeing any progress. If you was to do this for a month, the amount of progress you would see is ridiculous. Now, we're kind of done on this, on this mind map kind of thing. However, what I do want to touch on is the process of backtesting and how you should go about it. Because what a lot of people do, one sec, sip of coffee. What a lot of people do is they try and implement their, whole top-down strategy to the backtesting session, which is never going to work. You can't, number one, internalize or process that much information in such a short space of time. Normally, you're processing information over the course of a whole day for one setup, right? You're trying to do 10 setups in the space of an hour, and it doesn't make sense. What you need to do is separate everything apart. So if you want to learn about your daily time frame and your daily rhythm, right, so to speak, you train just that. You go on the daily time frame and you watch how price interacts on a daily level, right? Watch how price, okay, we've got a daily gap. All right, so we've got a daily gap. How does price react when it gets to that gap? What are the statistics on a reaction from that gap? And you drop down on a lower time frame and just basically look at the price formation that happens at that gap, right? You're not looking at an entry just yet. You're just looking at the price interactions on daily areas of interest. And that's something you do for hours by itself, right? Then if you want to do, let's say you want to collect data on the Asia range, you do that by itself. You open every day, right? So you open up your backtesting software, you start the day, you go to 7 a.m., 6 a.m., whatever you want to start your session at, watch the price action that happens there and test just that. You can obviously look at the higher time frame and say, okay, cool, we're in an area of interest. However, you're not doing a whole top-down analysis. You want to collect price behaviors, test them out on its own, build a little bit of context. You don't have to do the whole top-down, but eventually all these things will come together, right? You do each component individually and it will come together. And I guarantee you, right, because a lot of you have never done you've never put yourself through a process. So you have nothing. That's why you're probably not winning anyway, right? Because you don't actually know what you're looking for. But if you break it down into each individual component, right, do your daily time frame, then you look at, low resistance areas of liquidity. Just look when they form, look what happens before they run into that level, what kind of structures form. Then you look at injections. What does price do when it injects liquidity? What does price do when it distributes liquidity, all separately? Your entry time frame, market shifts, your London Open, and eventually they will all start to piece together. So imagine you're now for instance, you're looking at your daily time frame, you see your little point of interest, you say, I've seen this before, I've collected data on that. 60% of the time when we run into this, we'll respect it and bounce off. And on the 4-hour time frame and the 1-hour time frame, we want to see this. And then we've got an injection. I've studied injections. Injections do this, and we've got an injection. Now my London Open setup's formed. And and it just gets smaller and more refined. And that's how you do it. So stray away from trying to do it as if you would break down your live charts. Break it down in components. Asia session by itself, London Open by itself, London Close by itself, New York Open by itself, so on and so forth. And I'm sure you will reap a lot more rewards. And I want to say that as you go through this process, you refine certain things. Your risk will be high at the start. Let's say on your Asia session sweep, you may start off with just a standard 30 pip stop, 20 pip stop, 10 pip stop, right? Maybe again, 1-to-1s. And then you'll refine it. You say, the majority of the time, this runs more than 10 pips. Let me extend my target, right? That's what you can do then if you want a base kind of risk model. Or you say, it never really runs above this high. I can keep it above just that high and then I'm sweet. You get that from experience, right? You can then start to change your model from being set 10 to 10, 20 to 20, to then analyzing price behavior and say, when we get to that inefficiency, I know that price is going to react from there, most likely from my data, and I will then pull out some profits. Anyway, I'm going to wrap that up there. I might do a video on like literally me doing a back testing session, but I hope this video has been insightful, right? Just to kind of conclude it, remember, focus on the process of internalizing price behaviors, right? These things here, focus on these, right? Focus on these, 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 internalize them. Focus on all of these, right? Not being profitable, but focus on internalizing that and getting a deeper connection with price, right? Understand the volatility drivers. Where does price go from liquid to illiquid? Where does price start to, seek liquidity? So on and so forth. And then you can build your structured risk parameters around that. Hope this has been insightful, guys. I will see you in the next video. Peace.